Hello traders and market enthusiasts. Ifty here from CLiK Trading Education with your weekly market roundup for the week ending 19th September 2025. From soaring tech stocks to a wobbly FTSE, we've got a packed recap. So let's dive straight in. Global markets served up a mixed bag. US equities led the charge thanks to a wave of optimism around artificial intelligence and semiconductor demand, while European markets struggled to keep up. The performance gap between the US and the UK tells a bigger story about diverging economic momentum. First stop, US tech. The Nasdaq surged 3.1% this week as investors piled into AI and semiconductor names. What fueled the rally? Softer inflation numbers. US CPI came in at 2.9% year on year, with core at 3.1%, strengthening expectations for a 25 basis point Fed rate cut. Add in strong AI demand for Nvidia and Intel and the buzz from Apple's iPhone 17 launch, and you've got a tech party in full swing. Traders note, when valuations start to look like Everest Base Camp, take your oxygen. Risk management is key. Across the pond, the mood was less upbeat. The FTSE 100 slipped 0.5% after UK government borrowing ballooned to around £18 billion in August, sparking fears of fiscal tightening in the autumn budget. Disappointing industrial output figures added to the gloom, and the pound fell 0.71% as sterling struggled with those fiscal and growth worries. Over in energy, crude oil slipped 0.91%, even though OPEC reiterated its supply discipline. The culprit, demand fears with signs of low-income consumer spending fatigue in the US, raising questions about future energy consumption. Right now, demand-side fundamentals are stealing the spotlight from supply management. Crypto traders had a mixed week. Bitcoin rose 0.7%, once again proving its digital gold credentials. Meanwhile, Ethereum dropped 4.55% and Solana fell 2.85% as renewed US regulatory scrutiny pressured altcoins. It's a reminder that not all crypto assets are created equal. Institutions continue to gravitate toward Bitcoin's more established framework. Currency markets were relatively calm. The US dollar index edged up 0.23%, supported by positive yield spreads. The Japanese yen gained 0.21%, while the euro and pound stayed range-bound as traders await the next round of economic data and central bank guidance. So, what does all this mean for traders? Firstly, Federal Reserve focus. A September rate cut is almost priced in. Any hawkish surprise could trigger a swift market repricing. 2. Technology leadership. AI momentum is powerful, but stretch valuations call for caution and well-placed stop losses. 3. Safe haven positioning. Gold and silver continue to act as reliable portfolio hedges. 4. Crypto selectivity. Bitcoin's resilience suggests sticking with established assets in times of regulatory uncertainty. And lastly, European challenges, UK fiscal worries and weak output keep the FTSE and sterling under pressure. That wraps up our weekly market roundup for the 19th of September 2025. If you found these insights useful, don't forget to like, subscribe, and join the CLiK Trading Education community for more process-driven market analysis. Trade smart, trade with discipline, and I'll see you in next week's roundup. Thank you for watching.